How's it going, everybody? It's Stas here. Welcome back to another video. So today, like we do every single Sunday, we're going to be breaking down the markets. We're going to talk about what happened last week, breaking down some charts, and I want to break down my thoughts for this upcoming week. We're going to talk about some stocks I'm looking at, and overall my thoughts on the markets when it comes down to the month of September in general. So if you guys find value, smash the like button, subscribe, go down below, get your $50 from M1 Finance or 2 stocks from Webull, limited time, and check out my Patreon if you guys want all my real-time buys, sells, call outs, a morning update video, plus more. All of that's on Patreon, link down below. And with that being said, let's get right into the video. So it's no surprise, it's no secret that the stock market has been doing very, very well as of late. In fact, ever since about 10 days ago, the 19th of August, I'm filming this on the 29th of August, the S&P 500, when it comes down to SPY, which is an ETF that tracks the S&P 500, has gone from $434 to a brand new fresh record high of $450 roughly this past Friday, which is a move of $16 or about 3.5% to 4%. So to go 3 to 4% on SPY in about 10 days, that is a very, very strong move to pretty much wrap up August. And we'll talk about September here and my thoughts about September in a couple of minutes in this video. But first, let's break down some quick technicals. So we consolidated a bit at about 447, 448, we broke out. We're trading above the moving averages. We hit an all-time high. There's really not much more to say other than that when it comes to SPY, and the bulls are just clearly in charge. It's very obvious, and the same comes down to QQQ, which tracks the NASDAQ 100. You can see ever since we broke out of this consolidation zone, range, whatever you want to call it, and you guys can see it here if I zoom in a bit. We consolidated ever since the end of July, pretty much since the 23rd of July throughout the 23rd of August, so about a month straight. We consolidated between 370 as resistance and 360 as support. We broke out of that about 6 trading days ago, 6 calendar days ago on the 23rd. We went from 370, we broke out of there, and now we hit a fresh all-time high on Friday at about $376.56. And remember what I said for SPY. SPY went up about 3.5% since the 19th of August. QQQ has gone up. Let's take a look. From 358 to 376, it's gone up about 4.5%, and the Russell 2000 has probably gone up even more than that. The Russell since the 19th has gone from 2130 to about, what is this, 2277, which is up about 6.5%. So the markets have been crushing it the past couple of weeks. It's pretty obvious, and especially the past 7 to 10 days, the markets have just been ridiculous. So the main question here is, will the markets continue this in September? That is a very, very good question. And to answer this, we're going to talk a little bit about history, and I'm going to show you all a graph here in 2 minutes. But first, let me read you this. September has been the worst month of the year for the S&P 500, which is the index that's comprised of the 500 largest publicly traded U.S. companies, right? You guys all know this. With the benchmark index falling an average of about 0.56, well, I guess exactly 0.56% since 1945, according to Sam Stovall, chief investment strategist at CFRA. The S&P has advanced only 45% of the time in September, the lowest rate of any month CFRA's data showed. And I guess 45%, even though it's the lowest rate of any month, it's still not that bad. I guess, it's a 0.5%, or not a 0.5%, it's a 1 in 2 chance that we do advance this month. But when you look at this graph here, you'll see how bad September has been historically. So bear with me. Let me pull this up on Safari. I want to show you guys, and pay attention to this. This is very interesting stuff, and I'm sure you've heard about it. You know how September is roughly or it is the worst month historically. So let's take a look at this. We see here January is 1.1%. Okay, average percent change since 1945. February is negative 0.15%. Then we have March about 1%, April 1.7%, which we called out back in April before April even happened, if you guys remember. And if you were watching my channel back then, I made a video at the end of March how April would likely be a great month, and that ended up being a great month because historically speaking, April is usually a great month. So April 1.7%, May 0.3%, June 0.14%. July is also a pretty good month of about 1%. August, roughly a break-even month of 0.02%. And you guys can see down here, September is the biggest red candle or red bar, whatever you want to call it, negative 0.56%. And if history repeats itself, sure, we might pull back about 0.5% in this upcoming month. But don't worry, because October, November, December, those months are great. We have October 0.9%, November 1.45%, and December 1.6%. So historically, the holiday months being mostly November, December, January, those are very solid months along with March, April, and July, with again September and February being the two worst months. So again, if historically, or rather if history repeats itself, this might not be the best. And you guys see the nice little Rolexes here being advertised on the right. Ignore that. Ignore that. So, yeah, what do you think? I mean, this is interesting stuff. I personally am not going to do anything different just because of that stat. Maybe, I mean, I've already had a decent amount of cash on the sidelines. I'm going to keep that cash. Maybe I'll, keep it to deploy some money maybe at the end of September. I don't know. But overall, listen, guys, I'm just going to be doing the same. I'm going to be averaging in to my ETFs. I'm going to keep cash to look for opportunities when it comes down to my trading. And nothing much is going to change on my end of things. And I'd love to know what you guys have to think. As always, drop me a comment down below. And if you all are enjoying the video so far, hit that like button as well. Make sure to subscribe if you want more content from me. And I appreciate all you guys for giving me the kind words, the recommendations, the tips, and the comments about me having the CV. And quick update, I really feel great. I lost my sense of smell. My taste is still there. I'd say it's about 70%. But other than that, the first night, 2 days ago, when I tested positive, I was sweating a bit, a little light fever. But now I have a 97 temperature. I feel pretty normal. I'm not trying to downplay the CV because I know it's rough for certain people, obviously. But for me, my scenario right now, I feel pretty decent. I'm not even going to lie to you guys. And who knows? It could get worse the next couple of days. I'm only 2-3 days into it. But as of now, I feel pretty good. And I do appreciate all of you guys out there again for all the kind comments, the messages, the DMs. You guys are awesome. And I love all you guys out there who support my channel. You're just awesome. So let's talk about some stocks now that I'm personally looking at, and most of these, pretty much all of these, are reporting earnings this week. Zoom's number one, ZM, they report earnings on, let's take a look here, the 30th, so that's tomorrow on Monday. And by the way, guys, we still have 2 days of trading in August. So we have Monday, Tuesday, that's the 30th, and the 31st of August. There is a 31st of August, right? I don't want to sound like an idiot. I'm pretty sure there is. I'm 99% sure there is. Yeah, there is. So we have 2 more trading days here in August before September starts. So we're going to be looking at Zoom. Zoom is one of those stocks that it's really relying on the CV. I mean, it has a business model underneath it. It does well. There's demand for the product. But let's be honest. If we get lockdowns, people stay home more, Zoom's going to do better, right? But if we get no lockdowns, people are still going to use Zoom, but maybe the stock price will struggle, will suffer at that point. That is one way that you can look at it. And at this point in time, we saw a double top at about 405. We hit the first top in the beginning of July, second top in the beginning of August, right? Literally at exactly 405. And then we saw a big drop from 405 about a month ago down to where we are now, 340. The stock has lost about 17%, almost putting it back into bear market territory. And it is hanging on by a thread. I'm not going to lie. It's below the moving averages. We're seeing a death cross here on the 4-hour chart, and we're holding the uptrend. We're trying to at 340 at a higher low, but again, it's holding on by a thread. So I think if this breaks, boom, we're probably going to end up seeing a push towards the low 300s, if I'm being 100% real with you guys. That is probably where we're going to go. Granted, if they do very well with earnings, if they just destroy numbers, surprise us, guidance is great, that could go out the window. That could easily go out the window. We could be over $400 again in the meantime. But let's say, or in the very short term, but in the meantime, let's say their earnings are not great. Let's say the guidance is underwhelming. This stock's going to tank. I just have a feeling it's going to tank. So we got to be careful. And I showed you guys this time frame a couple of videos ago. Look at this yearly chart. If you look, if we break under 340, which we're hanging on by a thread, this could shoot down, like I said, low 300s. And if 300 breaks, we might be going 200s again towards the bottom of this overall downwards channel on the 1-year chart, which makes me a little bit worried, I'll be honest. But overall, I'm still watching it. Ticker symbol ZN. And Palantir, PLTR, this is another one I'm watching. Even though I'm not invested in Palantir, don't own it as a trade either, I'm watching it. I think it's pretty attractive. Look, we have an inverse head and shoulder, left shoulder head, right shoulder here. We're clearly holding the neckline at about 21.50. That's very obvious. I've mentioned this before. But a new thing that I just saw, a new technical pattern that I just saw when I was prepping this video, the ascending triangle. This is looking very good, guys. Very good. And by the way, Palantir went up about 3.4% on Friday alone. So that's showing that the bulls are trying to break out, but not quite yet because we're still struggling at 26. So the ascending triangle is clearly here, right? Clear resistance at 26, but we're uptrending into that resistance, higher lows, and we're squeezing deeper into the triangle. So the way an ascending triangle plays out is we end up squeezing out and we see a huge leg up, whether it goes from 26 to 28, 30, 32, 35. I have no freaking idea, but all I know is if the ascending triangle plays out, we're breaking out. So Palantir, watch out for it, guys. And if I had a target in the short term, I would definitely think it's going to be at about $28, which is right around that high point from the end of June, early July, which gives it about $2-3 more upside from where it currently is, or about 5-6%. So I like Palantir as a trade. I also like Chewy here, which also, and by the way, Palantir doesn't report earnings this week, but Chewy does. Chewy reports on the 31st, I believe, or no, they report on the 1st of September, which is on Wednesday. So at this point in time, clear inverse head and shoulder on Chewy as well, very similar to Palantir. We're moving above the 180 SMA, so we are holding the uptrend, but we're holding, or rather trading, under the 50 SMA. So we're in between the moving averages on the 4-hour. I would love to see it break out of that 50 SMA, which is right around $90. I think that would be a good spot for the bulls to maybe take a trade back to the mid-high 90s. So I'm going to put an alert at about 90. Right now, a mark is at or above alert at $90 per share. And another thing worth mentioning is $88. $88 is so critical on Chewy, guys, considering that was the high point from March pretty much all the way through July into early August. So if we don't hold 88, we start going 85, 84, that's going to be ugly. I would not like that. So 88's got to hold, and again, we got to break above 90. From there, this could be pushing back 92, 95, 97. Very possible. Heck, maybe back over $100 at some point. So we're going to be watching Chewy as they report earnings on the 1st. DocuSign is also reporting this week. Let me show you guys what I'm personally seeing here. They report on the 2nd, so that is on Thursday. DocuSign went up about 2% on Friday. It's moving above the moving averages, which is awesome. And this is interesting, right? The moving averages, even though we're moving above them, like I said, they're meeting each other, meaning they're like kissing right now. Look at that. On the 4-hour chart, the 50 is right on the 180. So what the heck's going to happen, right? Are we going to see a death cross, right, where the 50 crosses under the 180? I hope not, because that would not be good for the bulls out there. Or is the 50 just going to rip right off the 180 and start trending back up as the stock is moving up towards 310, 315, 320, which would obviously be good for the bulls. So at this point in time, let me clear the drawing set. This is a very funky pattern. I'm not going to lie to you guys. We have a lot of choppiness ever since the middle of July. We've gone from 300, 270, back to 310, 315, back to 280. Now we're at 300. So I want to see if this starts, moving up towards 308, 310. So I'm going to put my alert. Let's just put it at 302. We got to watch it at 302 for a move up to that 310 level. Maybe we could catch a trade there. Maybe even a 315, which is the all-time high, at least I think it is, here on DocuSign. Let me double check on the 3-year. Yup, it's the all-time high. So watch out for 302. On this particular stock. It's very, very important. Another one that I'm looking at here is, what is it? Five Below, FIVE, and I pretty much never go to Five Below. I used to when I was younger. They have this little deal. I'm pretty sure they still have it. It's you get these little candies. They're like 10 for $1. I would always do that. I'd always go in there, get Airheads, get these little Sour Patch Kids, get a piece of gum for $1, literally, all this candy, and it was great. I'm reminiscing a little bit right now as I'm filming this video, guys, but look, this looks really good. This stock broke out of the horizontal channel. It was trading within this ever since the beginning of January, so 9 months ago, 8-9 months ago. All throughout literally the beginning of August. So it was trading between 170 as support, 200 as resistance, like clockwork. This $30 range was where it was trading with them. And then all of a sudden, boom. End of August, or beginning of August rather, it broke out from 200 to 237. I'm assuming that's an all-time high. It sure is. We hit that all-time high, and now we're pulling back towards the low 200s, which is great. This is what we want to see whenever we're looking for a re-entry or an entry in general. And I don't know why I said re-entry, because I wasn't even in Five Below to begin with. But we want to see a pullback on the breakout to get an entry point on the momentum, if that makes any sense. Because the fact that we broke out of 200 all the way to 240, that is telling us that there is momentum, but we don't want to buy it when it's too overbought, which it was overbought at 240. Heck, even at 230, it was overbought. But now that we're pulling back, we went down 4% on Friday. Hopefully, we go down a little bit more. This is going to be good. So they report earnings on the 1st. So what is that? Wednesday? They report earnings on Wednesday. So if Five Below somehow does well with earnings, guidance is great, all that good stuff, and the stock somehow hovers around 200, it doesn't go crazy, I'm going to be looking for an entry point after earnings, because I've said this before, I don't trade before earnings. I don't gamble before earnings. I've done it before. I don't like doing it. So I'm going to wait until after earnings. If it consolidates at 200, earnings are great. I think this could be a nice entry point for a move back up, maybe to 230, 240, which could give it anywhere from 10, 15% upside, of course, depending on where you end up entering the position. So let me take a quick sip of water, guys. Let me know your thoughts down below. And let's keep on going. So the next stock is ChargePoint, CHPT. And this is one that if you guys are in my Patreon, which again, it's linked down below, make sure to check it out. You get all my buys, sells, call outs, all that good stuff. And if you sign up today, you get charged today and on the 1st of September. So I'll refund you for your charge today, and just DM me that you signed up and I'll refund you. We'll get that squared away so you're not double charged. But I mentioned this a couple months ago, weeks ago, I forgot exactly when, but I ended up selling out of my ChargePoint. I took a nice profit. We traded it. We made some good money, and the chart is not looking so great. I'll be the first to tell you that. The chart, it's looking ugly, to be honest. I mean, it was at $49 back in December, dropped all the way to $20, so it lost 60% of its value like that in a couple of months. It went from 20 back to 36, which is where we traded it, not exactly at those levels, but if I remember correctly, my average was mid-20s, something like that, low 20s, probably not really low 20s. It was more like mid 20s. And I sold out something like 30. I forget exactly, but we made money in this downwards move, and now we're moving down again. We're pretty much right back at $21. We're down about 40%, well into a bear market ever since the end of June, with earnings coming up here on the 1st of September, so on Wednesday. So I think ChargePoint is worth watching, even though it's downtrending, even though we're seeing a death cross, even though it's trading under the moving averages. I think we got to keep an eye on it, because the second, and we can clearly see, I mean, we've held above 20 in the past many times. I mean, the second we rip up above 20 into the mid-20s, this thing could be off to the races back to the 30s, $35. I mean, we've seen it do it many times in the past. If you guys look at this pattern, look at this. We held 20 back in March, ran to 33. Pulled back to 20, ran to 27. Pulled back to 20, ran all the way to 35. Now we're back to 20. Do we break under 20, go to the teens? That's possible, but I think we could end up holding 20 and running at least to the mid-high 20s for another time. You know, one more time at least. So I'm going to be watching ChargePoint for exactly that reason. And we have one or two more. Let's do two more. Why not? We have AEO reporting. This is American Eagle, which admittedly I have never I've stepped foot in an American Eagle, but I've never shopped there in my life, which doesn't really matter for the sake of this video. But I'm sure a lot of you guys do, because the stock's been doing pretty well, meaning the company's probably been doing well. And what we're noticing here is they report earnings on the 2nd, so that's on Thursday. We're in a downwards channel, moving under the moving averages, death cross, all that jazz, right? So for me to even consider trading AEO, and it went up 5% on Friday, by the way, this needs to break out of this downwards channel. It's currently trading under the 50 and the 180 and the resistance of this channel. So I'm going to put my alert at about 33.50 for starters. And does that mean I'm going to jump in once it breaks 33.50? No. But if it starts moving, I'm going to be watching it closer, if that makes any sense. And we also have CrowdStrike reporting, which I'm pretty excited about, even though it's not the best setup because it's very overbought. They report on the 31st, so that's on Tuesday. So if this ends up pulling back anywhere towards 265, 260, maybe 250 by those moving averages, coupled with a strong earnings report, guidance as well, that is where I'd be looking to enter. And granted, if this thing goes to 300, 305, it's okay. We can't win every trade. You know, with me not trading earnings, the thing is I miss out on some big moves, but I also save myself from a lot of big drops for when the earnings report isn't that great and the stock goes down. Even sometimes when the earnings are okay and the stock goes down anyway, if that makes any sense. So we're going to be watching CrowdStrike and all of these stocks here that are reporting, even though I'm not buying them before, the earnings report. That is just the truth of the matter. So overall, guys, that's pretty much it. And it just hit 6 o'clock. So let's pop up the futures market quickly. Let's see how that's looking, because this opens up every Sunday at 6 p.m. on the East Coast, if you guys didn't know. So let's do that before we wrap up. S&P futures are currently up nothing, pretty much nothing. Up 75 cents, a dollar, or 1 point, up 0.02%. Let's see, the NASDAQ futures are up about 0.02%, so nothing crazy there either. And the Dow futures, if this wants to work, come on now, ThinkOrSwim, /YM, Dow futures are at break even as well. So pretty much all the main indexes break even. We'll see how that plays out. Drop me a comment when you're watching this what the futures are looking like. But as of now, that's what they're looking like. So if you guys enjoyed the video, hit the like button, subscribe, drop me a comment, let me know your thoughts, and check out my Patreon. If you guys want my buys, sells, call outs, all in real time, more access to me, and a morning update video, plus more, all that's on Patreon, link down below. And again, remember, if you sign up today, you'll be charged right now and on September 1st. So shoot me a DM. I'll refund you that payment so you're not double charged. Very, with the dates being very close together, and I'll be happy to refund you. And you could also go to stosserfest.com/Patreon if that's easier, if you want to join the Patreon. And also check out my M1 Finance link for $50 from them free, and my Weibo link for 2 stocks up to $1,600. All of those are linked down below. I'll catch you guys in the next video. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out.